Welcome everyone. Today we are looking at topic 4 in your SS1 accounting series, Cash Book. This is one of the most practical and important topics in accounting. The cash book is both a book of original entry and a ledger account. It is used to record all cash and bank transactions. This topic is guaranteed to appear in your examinations. You must understand the different types of cash books and how to balance them. Pay close attention. Let us begin. First, let me explain what a cash book is. A cash book is a book of original entry that records all cash and bank transactions. It is both a book of prime entry and a ledger account. This means that it serves two purposes. As a book of original entry, it is the first place where cash transactions are recorded. As a ledger account, it is the cash account in the general ledger. The cash book has two sides. The left side is the debit side. It records all cash and bank receipts. The right side is the credit side. It records all cash and bank payments. The cash book is used to keep track of cash and bank balances. It is essential for managing cash flow. Understanding the cash book is essential for recording cash transactions. This is a key concept. Now let me explain the importance of the cash book. The cash book is important for several reasons. First, it records all cash and bank transactions. It provides a complete record of cash movements. Second, it helps to prevent fraud. It provides a clear audit trail. Third, it helps to manage cash flow. It shows how much cash is available. Fourth, it helps to detect errors. It allows for checking and verification. Fifth, it simplifies the posting process. It is both a book of original entry and a ledger account. Sixth, it provides information for financial statements. It is used to prepare the balance sheet and cash flow statement. Understanding the importance of the cash book is essential for understanding why it is used. This is frequently tested. Now let me explain the types of cash books. There are three main types of cash books. The first type is the single-column cash book. This records only cash transactions. It has only one column on each side. The second type is the two-column cash book. This records cash and bank transactions. It has two columns on each side. The third type is the three-column cash book. This records cash, bank, and discount transactions. It has three columns on each side. The choice of cash book depends on the needs of the business. Most businesses use the two-column or three-column cash book. Understanding the types of cash books is essential for selecting the right one. This is frequently tested. Now let me explain the single-column cash book. The single-column cash book is the simplest type. It records only cash transactions. It has one column on the debit side. This column records cash receipts. It has one column on the credit side. This column records cash payments. The single-column cash book is used by small businesses. It is easy to maintain. It does not record bank transactions. Bank transactions are recorded separately. The format of the single-column cash book is simple. It has columns for date, particulars, folio, and amount. The left side is the debit side. The right side is the credit side. Understanding the single-column cash book is essential for understanding the basics. This is a key concept. Now let me explain the two-column cash book. The two-column cash book is more common. It records cash and bank transactions. It has two columns on the debit side. The first column records cash receipts. The second column records bank receipts. It has two columns on the credit side. The first column records cash payments. The second column records bank payments. The two-column cash book is used by businesses that have a bank account. It provides a complete record of cash and bank transactions. It is easy to balance. The format of the two-column cash book has columns for date, particulars, folio, cash, and bank. Understanding the two-column cash book is essential for recording cash and bank transactions. This is frequently tested. Now, let me explain the three-column cash book. The three-column cash book is the most comprehensive type. It records cash, bank, and discount transactions. It has three columns on the debit side. The first column records cash receipts. The second column records bank receipts. The third column records discounts allowed. It has three columns on the credit side. The first column records cash payments. The second column records bank payments. The third column records discounts received. The three-column cash book is used by businesses that give and receive discounts. It provides a complete record of all transactions. It is the most common type of cash book. The format of the three-column cash book has columns for date, particulars, folio, discount, cash, and bank. Understanding the three-column cash book is essential for recording discounts. This is frequently tested. Now, let me explain the contra entries in the cash book. Contra entries are entries that appear on both sides of the cash book. They occur when cash is transferred to the bank or when cash is withdrawn from the bank. These transactions affect both cash and bank. A contra entry is recorded on both sides. When cash is paid into the bank, it is recorded on the credit side of the cash column and on the debit side of the bank column. When cash is withdrawn from the bank, it is recorded on the credit side of the bank column and on the debit side of the cash column. The letter C is written in the folio column to indicate a contra entry. Understanding contra entries is essential for balancing the cash book. This is frequently tested. Now, let me explain the balancing of the cash book. The cash book is balanced at the end of each period. The debit side is totaled. The credit side is totaled. The difference between the two sides is the balance. If the debit side is larger, the cash book has a debit balance. This means there is cash available. If the credit side is larger, the cash book has a credit balance. This is called an overdraft. An overdraft means that the business owes the bank. The balance is carried forward to the next period. The balancing of the cash book is essential for determining cash availability. This is a key skill. Now, let me explain the differences between the cash book and the cash account. The cash book and the cash account are often confused. Let me clarify the difference. The cash book is a book of original entry. It is the first place where cash transactions are recorded. The cash account is a ledger account. It is part of the general ledger. The cash book is both a book of original entry and a ledger account. It serves both purposes. The cash account is only a ledger account. The cash book records transactions with details. The cash account records only the amounts. The cash book is used to prepare the financial statements. Understanding the difference is essential for understanding the accounting process. This is frequently tested. Now, let me explain the advantages of the cash book. The cash book has many advantages. The first advantage is time saving. It saves time by combining two functions. It is both a book of original entry and a ledger account. The second advantage is accuracy. It helps to prevent errors. The third advantage is control. It provides control over cash and bank transactions. The fourth advantage is information. It provides detailed information about cash movements. The fifth advantage is simplicity. It is easy to understand and maintain. The sixth advantage is fraud prevention. It creates a clear audit trail. Understanding the advantages of the cash book is essential for understanding why it is used. This is frequently tested. Now let me explain the disadvantages of the cash book. The cash book also has some disadvantages. The first disadvantage is limitation. It only records cash and bank transactions. It does not record credit transactions. The second disadvantage is risk. It can be lost or damaged. The third disadvantage is errors. Errors can still occur in the cash book. The fourth disadvantage is space. It requires space for storage. The fifth disadvantage is time. It takes time to maintain. Understanding the disadvantages of the cash book is essential for a balanced view. This is a key concept. Now, let me explain the bank reconciliation and the cash book. The cash book is used in bank reconciliation. Bank reconciliation is the process of comparing the cash book balance with the bank statement balance. The differences are identified and explained. These differences are due to timing differences. Examples include outstanding checks and deposits in transit. The cash book is adjusted for items like bank charges and interest. Bank reconciliation ensures that the cash book is accurate. It is an important control procedure. Understanding bank reconciliation is essential for understanding the relationship between the cash book and the bank statement. This is a key concept. Now let me give you sample exam questions to prepare you for your test. What is a cash book? A cash book is a book of original entry that records all cash and bank transactions. List the types of cash books: single column, two column, and three column cash books. What is the difference between the single column and two column cash book? The single column records only cash. The two column records cash and bank. What are contra entries? Contra entries are entries that appear on both sides of the cash book. What is a debit balance in the cash book? A debit balance means there is cash available. What is a credit balance in the cash book? A credit balance means an overdraft. State the advantages of the cash book: time saving, accuracy, control, information, simplicity, and fraud prevention. Let me summarize everything we have covered today. A cash book is a book of original entry that records cash and bank transactions. It is both a book of original entry and a ledger account. There are three types of cash books: single column, two column, and three column. The single column records only cash. The two column records cash and bank. The three column records cash, bank, and discounts. Contra entries appear on both sides of the cash book. The cash book is balanced at the end of each period. A debit balance means cash available. A credit balance means an overdraft. The cash book has many advantages. It saves time, improves accuracy, and provides control. Understanding the cash book is essential for accounting. This is Topic 4 in your SS1 accounting series. Study it well. It is guaranteed to appear in your examinations. Well done.